This is Alec from Titanflow. Today we're going to be discussing how to capitalize on a sell-off in the market. There's been a lot of bearish trends going on lately, and I think it's important for people to understand how to play the downside, right? Because we don't want to limit ourselves. So we're not only going to be talking about how to survive the downside, but how to thrive off of it, right? So how to view it, how to kind of shift our outlook and kind of our bias towards sell-offs, not as necessarily a bad thing, but as just and as equal of an opportunity to profit as the market running up to the upside. So the main thing here, really, in this video, we're going to dive into how to read option flow and what we're looking for in the charts, right? And those things are very important, but it all starts with your mindset. And what we need to do is, if you're one of these people, you need to ditch the bull bias, right? That's going to be the big thing, because as traders, we have the ability to play the downside. So there's no need to fear it. Many traders, as I said in the beginning, they see sell-offs as a bad thing, right? If you're always playing the upside and you're always long on everything, you view sell-offs as a bad thing. But, they're inevitable. They happen. So rather than seeing them as a bad thing, we need to kind of shift our mindset into, okay, how can I profit off of this, so that no matter what happens in the market, I'm confident in my ability to play either the upside or the downside. When you have this mindset, the best way to think of it is you're handicapping yourself. Anytime that there is a bearish trend in the market, you're handicapping yourself. And if you're someone that wants to consistently profit, you're cutting your opportunity in half. So it's really important to get over that sort of bull bias mindset. And if you can do that, then, I'm going to show you in this video how to profit off of the downside, right? So get your mindset straight, and we're going to be all right. We're going to be able to profit off of these sell-offs to the point where you might even start to look forward to them. Once you kind of get used to trading in a sell-off, it's actually pretty fun, because the downside tends to be a little more volatile, and the moves can be very aggressive, and it can be a really exciting way to profit in the market. Just like our bullish trends, technical analysis and option flow, they're going to guide us in how to capitalize on these bearish trends, right? So just like with the upside, we're looking at our charts and we're reading the flow. Well, those things stand true in a sell-off, right? It's all the same concept, okay? The best way to think about it is, when you're looking at your chart, flip it upside down and just think about it like you're trading the upside, right? You just flip your chart upside down. You're looking for the same things, right? Instead of looking for a bounce and a breakout to the upside, you're looking for a rejection and a breakout to the downside instead of the upside, right? And just like with option flow, we're looking for confirmation from our flow, right? Nothing changes. It's just a 180. It's a different direction of the market, but all the same concepts hold true. So when we're watching the flow, when we're playing the upside, we're looking for aggressive out of the money flow with short-term expiration. The further out of the money and the larger the contract purchases are, the more confirmation we have on short-term sentiment. And this holds true to the downside. Because the contracts are short-term, the theta is high. Because they're out of the money, this signals that they're expecting a large move, right? Because if they're purchasing out of the money, they're not necessarily expecting these contracts to go in the money. They might be, but they want to capitalize on a high gamma and cheap contracts that they're going to get a better bang for their buck with the net delta. So these two factors, out of the money and short-term expiration, they're going to combine to give us confirmation that whatever institution is purchasing these contracts, they have strong conviction in a short-term move, because most likely they're not going to be swinging these contracts and taking the hit on the theta unless they have really strong conviction that there's going to be an extreme move overnight, or even more so that they're going to be day trading it with a very large volatile move intraday. So we go and we take a look at an example of what kind of flow we're looking for. All right, so today being May 11th, at the time that these orders came in, we were able to spot an influx of QQQ puts. Right, QQQ always has a large amount of flow due to being a highly traded market indicator, just like SPY. So it's important to understand which flow is most useful to us as traders, right? Because we see sweeps coming in on the Qs nonstop all throughout the day. A lot of calls, a lot of puts. So it's really important for us to be able to interpret what is meaningful and what might just be a hedge, or it might just be, whatever the case may be. There's a specific pattern that we're going to be looking for. The most important thing to look for is the bid ask. When an order comes in at the ask, this is a strong indicator that this order was purchased due to whichever institution it was wanting to get filled, right? Think about it when we're trading as day traders, right? Think about, even if you're swing trading, whatever the case may be, when you're trading an option, you have a bid and an ask. You have your bid, which is, we'll start with the ask since we're talking about first. The ask is the price that the seller is asking you to pay for it, right? And the bid is the minimum amount the buyer is willing to pay for it, right? And in between, you have a happy little middle where you're more than likely going to get filled. Well, if you want to get filled as soon as possible, you go ahead and you enter at the ask, right? You basically go in and you say to the seller, yeah, okay, I'm good with that price. I'll meet your demand and just get me filled. So when you see a sweep in the Titan app at the ask, this is an indicator that whoever is purchasing this order, they're willing to pay a little extra. They're not being stingy. They're going to pay extra to get filled on this because they want to get filled as soon as possible. That's going to be our third indicator, right? Our first indicator is that it's an out-of-the-money contract. This was a 315, and at the time the Qs were at about 326, I believe, right? So that's $11 out of the money. That's pretty far out of the money. And May 14th expiration, so it's expiring in 3 days, right? So there's our first two. Check one, check two. Our third check is that these contracts were purchased at the ask. Okay, now the second thing to dive into is above the ask, right? And that's going to be the AA. When you see above the ask, that means that this institution took it a step further. Not only were they willing to meet the buyer at their asking price, they were actually willing to pay more than the buyer was asking just to ensure that they got filled. This is going to be a golden indicator along with our first two indicators, right? So when these three indicators align, that's going to be a strong indication that there is clear sentiment on the Qs. Now there is a fourth indicator, and that's going to be sort of what we would call rapid flow, right? And what rapid flow is going to be is when you see multiple orders come in one after another, right? And that might be the same institution kind of feeding in their little sweeps, or it may be multiple institutions that all have similar conviction in the market. But when you see, in this case, we had 6 orders in a row come in. When you have multiple orders all come in that are all out of the money, all of them are puts, all of them are for short-term expiration, with the exception of this order down here, and they're all either at the ask, above the ask, or in the middle, right? But they're not bids. That's our fourth strong indicator. So we just checked off all 4 boxes there. Now all we need to do from there is get confirmation from our chart, which we'll look at in a second. But just to show you guys real quick how even calls can be bearish, right? So a big misconception when reading option order flow is that anytime you see a call order, it's bullish, and anytime you see a put order, it's bearish. And the reality is put orders can be bullish and call orders can be bearish. So if we look at Tesla on May 10th, so this is going back to yesterday, right? We see that these Tesla calls sold below the bid, right? When you see below bid, that means that somebody sold this order. So they were selling their Tesla calls below bid. They were selling them for less than what other people were selling them for just to get out of the position. That's a strong indicator. Somebody was dumping their bullish position on Tesla because they knew that it was going to continue to make lower lows. And then on the flip side of that, about 25 minutes after that order goes in, you have an order. It wasn't out of the money. I think it was about at the money. I think Tesla was around 650 at the time, right? So pretty much at the money. But because it's short-term expiration, they're most likely going in the money for a higher delta and gamma. And they purchase this at the ask. So right after you have someone dumping their long position, you have someone grabbing a short position, right, with a significant amount of money, $517,000. Now these were just some smaller examples, but if you actually go back to the flow, there was that string we talk about, kind of like with the Qs here. There was a nice little string of calls being sold and puts being bought, right? So there's our indicator. So if we go back to Tesla on May 10th, right, those orders came in the first hour. So there's our first hour candle there from 9 to 10 a.m. Right, what happened? We started up here around 665. We rejected our supply, and all day we made lower lows. Right, we had nice confirmation. We kept rejecting supply and bouncing off of demand. So we traded within this tight channel here, and we could have played the highs and lows all day with confirmation from our flow. Right, there's a perfect way of how we can capitalize off of a sell-off. And if we go to the Qs that day, I'm going to the 11th. Here we are right here. Right, so you see as we traded up, we kind of popped off pre-market, and then look what happened. We got up to about 324. All those put sweeps start coming in. Boom, we sell off about $4 in the Qs. And what happens the next day? The next day, same thing. We keep rejecting this supply right here, right? So if you understand the basics of supply and demand, if you're interested in learning supply and demand, go check out our last YouTube video where I kind of explain the basics of it, and we'll have future videos coming out going more in depth on it. Regardless of what your trading strategy is, any sort of charting analysis that you do would give you a strong indication that the Qs are bearish here, right? And as you see, even we sell off, and even though we trade up into supply, once we hit that supply, sure enough, we sell off again. Trade up into it, sell off, right? So we have confirmation from our charts, and we have confirmation from our order flow, right? Now that we understand how to read our order flow, now you guys can see, with those two things confirming, we can confidently play the downside and profit off of puts. All right, guys, so just a little recap. Large out-of-the-money sweeps with short-term expiration are leading indicators, right? When you see people selling calls and buying puts, that's our bearish indicator in the option flow. Chart confirmation with measured potential assessment to confirm, right? So when we have our order flow confirming and our charts confirming, now we have a strategy in place where we can confidently profit off the downside. All right, I hope this helped a lot of you guys out. And if you have any questions, please feel free to reach out on the Discord, reach out on Twitter, or go ahead and drop a comment below. All right, guys, keep an eye out for our next video. We're going to be discussing the difference between day trading and swing trading when reading option flow, and how to sort of find which kind of option flow